Okay, this is a video on the income statement. So we've got Jill's Fashion has gross sales of 852,000. 300. So I'm going to fill that in here. With returns of 42,800. And then we subtract the returns out to get our net sales. So that's 809,500. And if it helps you, I'll put in that little border so we know. Okay, then we come down and it asks for to calculate out our cost of goods sold is ultimately we're trying to do. So we've got what is our inventory on January 1st. So it tells us in the problem the inventory on January 1st is 174,690. Then we purchased during the year $345,790 worth of goods, and then we paid freight of $18,107. So again, this is our beginning balance, this is our purchases, and this is our freight. So then if I sum those, that is our goods that are available for sale. Okay, so I'm kind of down here. Then what we do is we subtract out our ending inventory. So this is how much we had available for sale. We either can sell it or keep it. So then if we have our ending inventory 158,200, if I sum those, this is how much then must have been sold out. So that is our cost of goods sold. And then this is our net sales. So again, I'm trying to follow along, but obviously the gaps are a little bit bigger than my Excel. So we're down to that number there. Then we come down here, our expenses. So we've got I can type. Okay, so we got salaries and wages expense. Going back to the problem, it tells us those are 168,240. Rent is 48,200, and then advertising is 24,300. Utilities are 11,600, and then our taxes on inventory and payroll are 13,880, and then our miscellaneous expenses are 21,900. So we can total those up. So that gives us our total expense of $288,120. So then our income before taxes is going to be our net sales minus our cost of goods sold minus those expenses. So that is our income before tax. And then our income taxes are 34,800. So then our net income is going to be 106,193. This dollars so you can see them. So then again, if you were doing this in your homework, obviously these are going to be fill-in-able boxes. So you would just be dropping in those numbers. But the key to it is you've got to know what do you subtract and what do you add up. So we always subtract our returns to get to net sales. Then we take our beginning plus our purchases and our freight, that's what's available, and then subtract out our ending, because then we're going to assume that the rest of it was sold and charged to cost of goods sold. Then add up our expenses, then you take your net sales minus cost of goods sold minus expenses, and that gives us our net income before taxes. Subtract out taxes, and that leaves us our net income. Okay. Oops. All right, then let's see if we can do a quick analysis. So if we go to the next section of the book, so let me come over here and go on to page 621. If we are then going to analyze that income statement, so let's do